So obviously at the moment it can be a bit more challenging buying a property if you've got a small deposit. So let's just cover off a couple of the ways that you can get around that. The first, bank of mum and dad. So how can you use your parents in terms of buying a property? There's a couple of different ways that that can work. The first is bringing your parents on as a limited guarantor. What it means is that they are guaranteeing that part of your deposit, 20% deposit that you don't have. So if you had, for example, a 10% deposit, we would get a guarantee for the other 10%. That guarantee would be over your parents' property. Or it could even be over a term deposit, which may be preferable because then they're not putting their house at risk. There's a couple of different ways we can do that. We can do it all at the same bank, in which case the bank simply takes a guarantee and then applies that to the parent's property. We can do it across two banks where we go and borrow the remainder of the deposit on the parent's property, but in your name. And then separate from that, we borrow against your property at 80%. It achieves the same outcome. The added benefit of that approach is that the properties are kept completely separate and they don't even necessarily need to be at the same bank. The other options that we see are joint ownership. We see parents taking a percentage of the ownership of the new property. That can work well as well. The only thing there is the parents still need to provide a guarantee because they are owners of the property, but the guarantee is limited to the equity that they've got in the property. The other thing that we see a fair bit is parents providing a gift or a family loan. If it's by way of family loan, it needs to be interest-free, and there's a few things that we need to do around that to make sure that the tax treatment on that's okay. Otherwise, there's a risk that your parents could get faced with resident withholding tax.